Hi students, welcome to the Lesson 9 lecture on the Great Depression. Uh, First we want to look at the origins of the Great Depression, and the first possible cause of the Great Depression was overproduction. And let me explain what that means. Um, Namely, you might ask, it's overproduction relative to what? It sounds strange that producing too much of some things could cause poverty, cause some people to have not enough things, as people did in the Great Depression. So how could overproduction cause this? Well, it has to do with the fact that while real wages rose and welfare capitalism offered more benefits, that was that tendency for businesses to offer benefits and higher wages during the prosperous 1920s. So despite all that, working class incomes did not really rise much, and most working class Americans could not afford durable consumer goods. Over half of Americans bought consumer goods on credit in the 1920s. Furthermore, once a family had all of the durable goods it needed, there was no need to buy another car or refrigerator or vacuum cleaner, at least for a while, until the old one broke. And there was less planned obsolescence in this time period where things were meant to break down or go out of style more quickly. And so companies had to extend credit to less and less credit-worthy families to sustain purchasing. And by the late 1920s, overproduction of consumer goods was a huge problem. Of course, this is important. Overproduction did not mean that everyone was satisfied with the consumer goods they owned. It was not overproduction relative to Americans' desires for these consumer goods. Instead, it was overproduction of these consumer goods relative to Americans' ability to pay for them. You might say relative to an underproduction of purchasing power, so to speak. So that was the problem. And that's what we mean by overproduction. So you can see why it could cause poverty. People don't have enough money to purchase things. Businesses go out of business. They lay off workers. That reduces purchasing power even further. And even agriculture faced the same glut or oversupply in world markets. And facing these falling profit margins, American farmers responded with even more production in order to service their debts, which only further glutted world markets and lowered prices. So it could be kind of a vicious downward spiral where the problem would feed on itself. And this is a political cartoon showing farmers having a bad time with overproduction during the Great Depression. This came out in April of 1930. You see, cotton prices falling, wheat prices falling. This farmer's not having a good time. So that was one problem, one cause of the Great Depression was overproduction. Second problem was banking instability. Banks loaned money to farmers, but farmers' incomes were falling and they got into worse debt. There was a high rate of defaults on loans. In fact, 7,000 bank failures occurred in the 1920s. Large banks were also recklessly investing in unsound loans. This, this is still going on today. Recently, this is a funny cartoon I found of It's a Wonderful Life 2008 edition, which hope people have seen It's a Wonderful Life at some point. It's a great movie and actually has some relevance to the Great Depression. It kind of shows how the banking panic unfolded. It's got some good scenes in there of people fearing that their bank would go bankrupt, from all of these loans going bad, which means the bank doesn't get paid back. And so is the bank really going to have your money there for you when you go to get it? Especially if everyone starts to think like you and starts to get worried that your bank will be going under. And especially in this time period, before the Great Depression, when there was no deposit insurance. So if your bank went bankrupt, you lost your money that you had deposited there. You did not get it reimbursed to you like you would nowadays through the FDIC. So, but even with having the FDIC in place, there were still problems with the banking system, even in 2008. Not so much with ordinary depositors losing their money, but investment banks going bad. So, you know, ordinary depositors didn't lose their money. Um, the banks that specialize in that weren't as badly affected, but investment banks were very badly affected during 2008, and this cartoon kind of alludes to that. He says, "Tom, the money's not here. It's in Joe's house, and the Kennedy house, and 100 others." And then he's got his friend whispering to him, not exactly, George. I forgot to tell you I sold the loans to a hedge fund, and they got bundled with a bunch of risky mortgages and pawned off on unwitting investors and Asian banks." That's how it would work nowadays, I suppose. But anyways, there was banking instability in the Great Depression, and the international debt structure made this problem even worse because U.S. banks had made big loans to European nations during World War I. Europe was having a hard time paying off its war debts by the late 1920s. Britain and France relied on reparations from Germany and Austria, but those latter two countries, the losers of World War I, had increasing difficulty paying their reparations. In the 1920s, the U.S. agreed to give loans to Germany and Austria to help them resume paying reparations, but these loans decreased considerably after the U.S. passed the extremely high Smoot-Hawley tariff. And the reason is the only way Germany and Austria could generate enough wealth to pay off American loans was to export to the U.S. But the U.S. refused to lower its tariffs, instead jealously guarding the American market for American businesses. And so Germany and Austria couldn't easily export to the U.S. They couldn't raise the money to pay back their loans to the U.S. And so Germany and Austria began to default on both their American loans and the reparations payments to Britain and France, who in turn also began to default on their debts to America. So it just got worse and worse. Third problem was stock market speculation. The value of stocks kept on rising throughout the 1920s, and everyone assumed this would go on forever. People could buy stock on credit. They got loans from the bank to buy sometimes up to 90% of the cost of the stock on the margin, meaning with loaned money, and then waited for the stock to go up in value, and then they would sell it and pay off the loan, ideally. Ordinary people were caught up in the speculative fever and invested their surplus money in the stock market rather than in savings. Millions of middle-class Americans invested heavily in the stock market. Corporate profits also went into stock market speculation rather than into research and development of new products or into higher wages for workers. Banks invested savings and deposits in the stock market. And the stock market was unregulated at this point. Overpriced stocks increasingly did not reflect a company's worth or dividends. The stock market did not reflect real annual profits of companies, and eventually people started to realize this. The stock market suddenly collapsed with the loss of confidence among investors in late October 1929. There was a huge wave of selling and panic. Stocks rapidly lost value. Soon there were huge losses of investments by individuals, banks, and corporations. People who had bought 90% of their stocks on credit could not repay their loans after selling up their stocks at the reduced values. And the unlucky banks on the other end of the deal went bankrupt. The lucky ones survived. Not every bank went bankrupt, but even the banks that survived drastically tightened their lending standards. And suddenly it was much more difficult for consumers, with legitimate reasons to take out a loan. It was harder for them to get loans for home mortgages and durable goods. This led to falling demand for those durable goods. So factories suddenly were overproducing these things, so they cut back production, laying off workers who had no income to buy durable goods of their own. So that meant more layoffs, more reduced buying power, and the vicious spiral worsened as factories responded by cutting production and laying off workers even more. Unemployment increased as workers were laid off and firms went bankrupt. All the companies that supplied the durable goods industry lost their main customers. And it just got worse and worse, basically. Uh, what's more, fourth reason for the Great Depression was that President Herbert Hoover really did not respond decisively to these problems. He was kind of hoping that the economy would more or less fix itself without too much government intervention. President Herbert Hoover was inaugurated in March 1929, and the crash did not occur until October 1929. So essentially, Herbert Hoover inherited the problem. He didn't. A lot of the preconditions for the problem were set by the previous Republican presidents before him in Congress. But even so, he could have done more to respond, arguably, and he was ill prepared to handle a problem of this magnitude, which was ironic as he had won praise during World War I for fixing and restructuring Belgium's economy after the war. The enormity and severity of the Great Depression overwhelmed traditional sources of relief. Hoover's Reconstruction Finance Corporation, which provided emergency loans to banks and businesses, failed to restore business confidence. It was several $billions in money, but that's a drop in the bucket for the whole national economy at this point. Several federal actions actually worsened the problem under Hoover's time in office. First, the Federal Reserve restricted the growth rate of the dollar money supply in order to reassure investors and depositors that the U.S. still had sufficient gold backing for its dollars. Remember, this is still the time where the U.S. was tied to the gold standard. So the Federal Reserve had very limited flexibility for expanding the dollar money supply on a whim. They really couldn't do that. They had to worry about the perception of, the ability to redeem paper dollars for gold. And they also had to worry about the perception of their ability to redeem. They didn't want to be even tested on that bluff, so they made sure to kind of back off and slow down the increase in the paper dollar supply. But this caused interest rates to spike at just the moment when consumers, farmers, and industries were already having a hard time servicing their debts. It's often in hindsight been looked at as a huge contributor to the worsening of the Great Depression. Although in hindsight, really, what could the Federal Reserve have done aside from get rid of the gold standard? And even then, that would have alarmed some depositors and investors, might have set off a banking panic of its own. Who knows? Especially such an abrupt change like that. Secondly, Hoover and Congress raised the tariff on foreign goods to the highest level ever with the Smoot-Hawley tariff. I mentioned that. About a 50% tax rate on most imported products, hoping that it would encourage Americans to buy from American businesses, help those sales that were slowing. But American businesses' exports suffered when other nations retaliated against the U.S. and raised their tariffs on American-made goods. So what American companies gained from having more American sales, more sales to American consumers, they kind of lost just as equally having fewer sales to foreign consumers. It was kind of a wash, really. Might have even, and it definitely didn't help the whole debt system in Europe. It really destabilized that. So in hindsight, probably was not a good idea to pass this higher tariff. And third, Hoover resisted the demands of the so-called Bonus Army, a group of American World War I veterans who traveled to Washington, D.C. to plead for the federal government to deliver veterans' retirement bonuses early. So these were veterans from World War I who would have got their retirement bonuses in the 1940s, but they wanted it about a decade and a half earlier, given the severity of the Depression and the fact that many of these veterans were out of work. So they needed the money now, not in not 15 years later. Hoover ordered General Douglas MacArthur to disperse these bonus army protesters with federal tanks and bayonets, resulting in several deaths and over 1,000 injured veterans. This made Herbert Hoover look very bad, to be beating up on veterans. He's probably the most unpopular man in America after this point. And Hoover became widely blamed for not sympathizing with the suffering masses, or not seeming to sympathize enough. I'm sure he did sympathize somewhat, but he wasn't showing it when he reacted the way he did to the bonus army. So accordingly, Hoover blankets were the newspapers used by the homeless to keep warm. In their shanty towns, they named Hoovervilles in honor of this president that they hated for contributing to the intensification of the Great Depression. And one final problem was this natural disaster known as the Dust Bowl that just made things even worse. So during World War I, homesteaders out on the Great Plains bought more and more land and tractors, a lot of times on credit, to plow up the fertile soil for bumper crops of wheat. When the world wheat prices fell after World War I, they responded by plowing up more land. Because after all, you're in debt. If your profit margins are lower, what are you going to do? But you're going to have to plant even more crops and harvest even more so you can eke out enough money to service your debts on that lower profit margin. So everywhere, marginal land, that is to say land in dry areas not typically best suited for farming, was plowed up. The new farm machinery was much harder on fragile soils. Without ground cover, rains washed away millions of tons of topsoil, causing widespread soil erosion. Then, on the Great Plains, a drought began in 1930 and continued for a decade. Without rain to moisten the soil and no crops to anchor the soil, the dust was kicked up in the swirling wind, creating large dust storms. By the 1930s, many families packed up and moved west, many to California, where there was better weather and at least rumor of more work to be had. These people were known as Okies because many had traveled from Oklahoma. The story of the Okies is told in John Steinbeck's The Grapes of Wrath. You will be reading an excerpt from this novel for this week's discussion forum, so you'll see more about that later on. Here comes Franklin Delano Roosevelt and his New Deal. A very different approach to the Great Depression. In 1932, both Germany and the United States were in a state of crisis. It's kind of interesting to compare the two. In both nations, the failed economy had caused massive unemployment and widespread despair. People were losing their faith in capitalism and democracy and feared the Depression would never end. In both countries, voters sought a strong leader who promised to resolve the crisis. In Germany, Adolf Hitler was elected. In the United States, Franklin Roosevelt won the 1932 election by a landslide, along with strong Democratic majorities in both houses of Congress that enabled his administration to move quickly to pass a massive amount of legislation aimed at ending the Great Depression. Which, by the way, I should say, technically with Hitler, if you want to get into the technicalities of it, his party was elected as to be the largest party in their parliament, the Reichstag. They got 37% of the vote in the 1932 elections. And mainly because of this, Hitler was then appointed chancellor. So technically he wasn't elected to be chancellor. He was appointed, but he was appointed because his party won the most seats in their parliament. So in a roundabout way, he was kind of elected. His party was popular. Anyways, back to Franklin Roosevelt. He's really one of the most important presidents in American history, leading the country not only through the New Deal, but much of World War II, which we'll get to next lesson. In his political beliefs, Roosevelt was part of the progressive tradition, in that he believed that the federal government should expand its powers to control and reform the economy and help those in need. He wanted to reform and regulate banks and the stock market and protect labor. But he was not a socialist. Aside from the Tennessee Valley Authority program, not one part of the economy was nationalized in the New Deal, and he did not seek to substantially redistribute income. Instead, FDR saw his policies as the only way to save capitalism from its own crisis. Uh, so he is kind of more, he's kind of like Teddy Roosevelt in a way. It's funny, both Roosevelts kind of have this progressive philosophy of stay with capitalism, but regulate it so that it doesn't get out of hand. So, we kind of, in the early 1900s, had this progressive era. Then in the 1920s, we kind of moved back to the laissez-faire free market mentality. And now here in the 1930s, swings back to kind of a progressive-ish mentality of regulating business once again. It's kind of interesting to see how it goes back and forth, FDR did not campaign really with an ideology or a clear and consistent plan. He was more of a pragmatist. He sought out the ideas of experts and advisors, his brains trust, and implemented them and retained those that seemed to work. So he kind of, mixed and matched and was willing to try out a whole bunch of things to see what stuck. He didn't have a 100% confident plan coming in of, he's kind of, you throw an idea at a wall and see what sticks. That was kind of his approach. And while Hitler was haranguing vast crowds with fiery speeches, FDR reached his people through his soothing fireside chats, radio programs that informed and reassured the American people. So it's interesting that Hitler and Roosevelt, they're both leaders that come to power in 1933. They're both leaders trying to deal with the Great Depression. They're both leaders that are somewhat charismatic in their own right, in their own way. Hitler with much more aggressive style. FDR with a more soothing, folksy kind of style with his fireside chats. So there's some interesting parallels here. Of course, there's some vast differences too. Hitler was much more focused from the very start on military rearmament and aggressive annexation of neighboring countries. FDR, he focused his spending on things like national parks and basic infrastructure and things of that sort, which we'll get to here in a second. Things like the Civilian Conservation Corps, the Public Works Administration. Disabled by polio, the president was unable to walk without aid. A fact never revealed by the media at the time, interestingly enough. His desperate and failed efforts to recover from his polio gave him empathy with others who struggled with hardship. His wife, Eleanor, also played a crucial role in his politics. She became his eyes and ears, traveling throughout the country, visiting factories, mines, sharecroppers' shacks, camps, everywhere, to report back to him on the impact of the Great Depression and how the New Deal programs were working. We can also call her his heart, in a way, as it was Mrs. Roosevelt who advocated for African Americans, women, and young people and persuaded Franklin Roosevelt to include them in programs for the unemployed to make sure that they would be made more available to those other groups as well. So there were a lot of Southern Democrats, especially, who still were very stuck in like the segregationist mindset and only wanted these programs to be open to white men. But these programs did expand beyond that, thanks to her intervention largely. The New Deal. In his first 100 days in office, Franklin Roosevelt most of all sought to stabilize the economic situation and reassure public confidence in the banks and in the economy so that people would keep their money in banks and not cause banks to go bankrupt, and so that businesses would invest in production and put people back to work. To this end, Roosevelt began a series of fireside chats in which he reassured the country that the only thing we have to fear is fear itself. This is one of his sayings. He tried to convince Americans that lack of public confidence in the economy was the real danger. According to Roosevelt, if that could be overcome, the country would be back on its way to recovery. To keep panicked bank customers from withdrawing all their money out of their banks, Roosevelt also declared a 4-day bank holiday, closing the banks until the situation could be investigated, and certain banks in good financial standing declared solvent and safe to reopen, as per his Emergency Banking Act. Roosevelt also set up a number of new government programs to put people back to work doing some sort of useful activity. So these are not just handouts, welfare checks. These are jobs to do some practical good. So, for example, the Civilian Conservation Corps for building roads, parks, and hiking trails. The Public Works Administration for building public works for local government, such as schools and public pools, such as Fast Night Park here in Springfield, Missouri, was built under the PWA. The Tennessee Valley Authority, having the government build dams, power plants, and fertilizer suppliers in rural Appalachia. And this is maybe the closest you can say that, this is kind of a government-run business. So kind of the closest you could say Roosevelt came to like bringing a sector or region of the economy under socialistic, government, not just regulation, but ownership, Roosevelt also set up programs to provide emergency relief and organize central planning for how to deal with the crisis. So with the Federal Emergency Relief Administration, the Federal Housing Administration, this program still exists to provide low-interest home mortgages. The Agricultural Adjustment Administration, which this was later declared unconstitutional for interfering with commerce too much, such as by paying farmers to not plant too many crops, and by having the government purchase unsold produce from farmers only to have it dumped in ditches so as to get the prices of farm products higher. Nowadays, the federal government is perhaps even more generous with subsidies to farmers, but most of this food ends up going towards school lunches or foreign relief programs. We don't just dump it in ditches anymore. But it's no wonder that the Supreme Court thought this was highly irregular. It seems kind of strange to dump food in ditches while people are starving, right? And then the National Industrial Recovery Act. This was also declared unconstitutional for interfering with commerce too much. This act tried to force businesses and labor to agree to price controls and plans for output, sort of like what the U.S. did during World War I. But the courts were much less willing to tolerate this sort of central planning outside of wartime, interestingly enough. Finally, Roosevelt set up programs to oversee and regulate the stock market and the economy so that another crash would not happen in the future. Which, it's interesting that these things have not totally prevented, they prevented crises from being as bad as the Great Depression. We haven't had 25% unemployment since then, but we've still had crises. Anyways, these were intended to try to prevent the worst sorts of crises from recurring in the future. So we've got the Glass-Steagall Act, which included setting up the Federal Deposit Insurance Corporation, which ensured that the government would repay depositors if their bank went bankrupt, and then the Securities and Exchange Commission, which regulated the stock market. Then the Roosevelt embarked on a second 100 days of legislative activity. The second 100 days was another round of frenetic legislative activity in response to pressure put on Roosevelt from the left, who argued that Roosevelt wasn't doing enough to combat the Depression. This pressure came from the Communist Party USA, whose membership swelled almost 200,000 in the 1930s. And then you had labor leaders from the new Congress of Industrial Organizations, which was a little bit more of a radical labor union, almost kind of like the IWW, the Industrial Workers of the World. Maybe not quite as radical as them, but definitely more radical than the American Federation of Labor. And then you had Huey Long, who called for more wealth redistribution, such as through his proposed Share Our Wealth plan, where all income over $1 million per year would be redistributed to poor Americans. So basically, no one would be allowed to be there'd be an effective 100% tax rate on income over $1 million. Seemed pretty radical to a lot of people. This pressure led Roosevelt to launch a number of new programs, such as the Social Security Act of 1935, to provide income to retired workers. Still in effect. Huge program that a lot of people rely on. The National Labor Relations Act, or known as the Wagner Act. This stipulated that workers had the right to form unions and could not be fired in retaliation for union activity or for promoting a labor union. And then the Resettlement Administration, which provided homes for people who had been made homeless by the Great Depression and the Dust Bowl, especially. Later, there was also the 1938 Fair Labor Standards Act, which stipulated a minimum wage for both men and women of 25 cents per hour. Sadly, these policies did not prevent a new recession from breaking out in 1937. There was a bit of a blip upwards again in unemployment here after 1937, interestingly enough. So it was not a smooth ride towards recovery. And, based off of facts like this, free market economists who opposed these New Deal policies argued that the natural course of the economic cycle would have brought about an even better recovery if Roosevelt's New Deal policies hadn't interfered. Opponents of the New Deal lampoon Roosevelt with political cartoons like this, where you got all of his new agencies, his alphabet soup of, Agricultural Adjustment Administration, Works Progress Administration, Wagner Act, Civilian Conservation Corps, and on and on. And it's all supposed to fix the problem, but if you were here in 1937-38 and you see unemployment rising back to 12 or 13%, heading in the wrong direction, you might be saying to yourself, what's going on? Nothing seems to be happening, So some people were frustrated and thought, well, are these policies interfering too much in the economy? Does the government need to step away? There was a lot of debate about whether the New Deal policies were going too far. And it'll be up to all of you to decide for yourselves in this week's discussion forum whether FDR's New Deal policies were the appropriate response to the hardships that you will be reading about in the excerpt from John Steinbeck's Grapes of Wrath. So were these the right responses to these hardships, or would other responses have been better? Something to consider in your discussions for this week, which I look forward to looking at. So I will see you there.